Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the limelight today is on the metals as a sector, where in the month of May we saw some supports or bottom being created. June saw overall gains onto that. But how is July going to pan out for metals as a space is exactly what we will be discussing in the show today. Joining me for that is Kunal Shah of Nirmal Bang Commodities, Pritam Patnaik of Axis Securities, and Anuj Gupta is from IIFL Securities. Gentlemen, hi, thank you so much for joining us. And metals is a space where everybody has an eye on. Kunal, I'll start with you, because China is going to be a major factor. For the month of June, we saw China cut interest rates, and that perhaps was supportive. The China stimulus measures is something that the street is still waiting for. And in the meanwhile, you have higher interest rates coming from mostly all global central banks. So between the two of these, what's your sense? What will July watch out for in sense of fundamentals?
Yeah, so very rightly explained the three major factors which are going to be detrimental going forward in determining the outlook of metals. And I think the most important one would be what China does from here. So more than 45–50% of the consumption of base metals comes from China. And like you rightly said, they have cut down their rates so far, but that's not enough. So there is an anticipation building that there is going to be a strong action from the China as far as the stimulus is concerned. So it's just a matter of time, because the realty sector continues to remain major area of concern, and the ripple effect of that can be witnessed in the other sectors going forward also. So I'm of the very firm view that the downside in all of these base metals seems to be very limited. All the negative news pertaining to the Chinese real estate sector is being already priced in. So any brighter news or any signs or actual stimulus which is going to be announced in next 15 days, 20 days in that kind of period, that will lead to a rally in base metal prices. So I'm quite optimistic when it comes to metals. And I think most of the negatives have been already priced in, and the outlook from here seems to be looking on the upside. Okay. And most of these people are going to witness bounce back.
All right. So even before I get into each of those fundamentals and factors for metals, Pritam, the first question to you is also similar. What's your sense? What would you want to watch out now in July? Because we're done with interest rates. We do understand on what is going to pan ahead. There almost is a possibility, 100%, if not near that 25 basis points is a given for the US Fed as well.
Right. Manisha, the way I would look at it is there are two segments, two major parameters which will decide the trajectory of the base metals back. I mean, if I go back into history, I keep maintaining this, and I've said in multiple shows also, out of the 8 interest rate hike cycles we've seen, 7 have been followed by recession. So why should this not be again a case, right? We'll see recession coming in Europe and in US. So that's a given. I think that market is kind of digested and is, sitting on it. I think everybody's attention is going to be focused on what's China going to do. Two things. I think the base metals have also cracked significantly. Okay. Clearly, the demand side of the aspect has been factored in, but very little has been factored in on the supply side of it. Now, given the fact that all these metals have corrected to the levels that they have, any stimulus, any positive news originating out of China, mind you, I'm saying, could have a very, very significant impact on base metals. I'm not saying that it's going to be a runaway rally, but it's going to have a stabilizing impact on the prices on the lower level, and we could see gradual increase in the prices going forward. Because, like I said, one fact is looking at the demand side. I think that has been very well articulated by a number of reports that we've seen. Everybody has been talking about it could have a significant impact going forward. And if metal packs were to kind of get re-energized, I would have my bet on copper as a commodity. I think that's going to see the first benefit. Aluminium has gone through a little, negative sense. Even in India, it's gone through below the psychological level of 200 rupees. So it's going to take some more convincing and real demand happening there. But if China's story were to open up some positive news to generate, I think the benefit would actually go to copper first.
All right. I will come to that. Hold on your thought there. But, since you spoke about sentiment, and Kunal, this one is to you, it all depends on sentiment, doesn't it? Because when markets are waiting for bad news, they are actually waiting for it, and they would catch hold of that bad news and see selling. Would you say that sentiment has changed now, and markets are actually waiting for good news now, bad news all factored in?
Yes, absolutely. The markets are definitely waiting for some sort of good news, because what was from here, and higher interest rate factored in, quantitative tightening factored in. slow growth of China factored in. So what next? So the next is, amidst all this gloom, a bright sign from the China, say, we are going to come up with a stimulus. So far they haven't, but looking at the way that data points are indicating, it is inevitable that at some point they will have to say, look, enough is enough, and we will have to stimulate our economy. So forget about the world is battling through inflation. We don't care about the world. The inflation is low in our country. So let us stimulate our economy. So that is what the narrative seems to be for metals right now. And forget about that. Going forward, like we heard in the speech by senior Fed officials, 2023 is the year where we are going to see probably US will start cutting the rates. So the reversal of monetary policy, so that will be start getting factored in somewhere between September, October, and we are going to see that will be priced in from the September, October. So next 2-3 months, a minute downside, even if it comes, don't know, but I think this is a time when one should start building positions, assuming that something brightest from the China is going to come for this segment.
Fair point that. Anuj, your initial comments as well on what you would want to watch out now in for July, and for ferrous, non-ferrous, do you think this is a time to start accumulating?
Yes, Manisha ji, actually we saw that in last 6 months we saw a very heavy correction in the base metal. Now we are expecting in the coming 6 months, we are very optimistic from the side of base metal, as China is expected to giving a stimulus package which will provide the support to the economy, and also they are cutting the interest rate. And also if we talk about the US side, they are also looking towards the pause, or you can say a little bit on a correcting on decreasing on the interest rate side. So possibly expecting a potentially a higher side growing in the next couple of 6 months. So I am expecting a positive trend may be seen in the base metal side. So my view is on a positive side, and I'm expecting that whenever economy will grow, the demand from the base metal side will increase. So my view is positive side for the next 6 months.
All right. So the next couple of quarters can be positive for metals. Correction is almost done, and accumulation is what we could be looking at. I want to come to each one of you now with your top pick in the metal space. And Kunal, I'll start with you. Copper, I'm assuming, is going to be there. There are more concerns in copper when you look at inventories and production as well, whether it has been about Chile or Peru as well for that matter. What kind of gains, what kind of ranges now would you see for July?
So as far as copper and zinc, both remains a topic from my side. Copper, the story would continue to be on the demand side. Apart from the supply side, the demand side of copper looks pretty bright, looking at the way the demand for example, in India, we are assuming Indian copper demand to test, 2.5 million tons to 3 million tons in a matter of next 2 to 3 years. So another sharp uprise in demand from country like India is expected because of the electrification and the major demand coming from the power sector is driving. So even when the Chinese demand growth is expected to remain relative to China's demand growth to go about 2-2.5%, but the country like India is going to be a major factor for copper's demand point of view. So on the ground reality, if you look, the capacities basically getting installed in a country for refining is also adding up. And this will lead to a major rise in demand. So copper is top pick. Second is zinc. A lot of values right now. China's steel production have gone down significantly. Production from Europe expected to move up. All is basically factored in and priced in right now. So going forward, the demand for the zincs, mainly, I would say the major catalyst for the metals is India, believe it. The Indian demand growth is going to be exponential going forward in next 2 years, 3 years time. And the demand growth rate will be far higher than China, not the actual consumption, but the growth rate and demand will be quite high. So copper and zinc remains my two most preferred bet right now.
All right. Indian demand could surpass Chinese demand growth as well in metals, is the view coming in from Kunal. Pritam, what's your top couple of picks? Kunal has gone with copper and zinc.
I would tend to kind of stick to copper for now for very obvious reasons. I think while Kunal has covered a lot of the demand side of it, looking at the supply side of it, we were hearing some of the leading names in the industry talking about Chile being a very, not a very reliant supply source. Okay, you've seen issues relating to, labor in production. Also, another impact is that some of the older mines, the quality of mineral has also kind of reduced. So that is going to impact on the quality of production that they're going to do over a period of time. So that is going to push on the supply side, much more pressure on that side. But again, I'm saying that's going to be subject to demand picking up. My sense is second half of this year, we are going to see some stabilization happening. All the news have been factored in. Every government has today become very, very efficient to kind of reignite the economy, right? The boom to bust kind of cycles have from 10 years have reduced to a few months these days. All central banks know the magic wand, what to do to revive these things. And if that revival happens, I think my bet is going to ride on copper. I mean, if you talk about this current month, I expect copper to trade in a range of 705 to 735 in the domestic market. It's going to be a tight range, but I think it's going to trade in that range.
Anuj, going with copper, or you have a different favorite?
Definitely, I have a copper will the top pick because the inventory down by almost 30% in last 1 month. So this is a important factor for the copper, and I am expecting copper may test between trade between 700 to 750. This would be a biggest range, but I am expecting that it will move in this range. But another side, I have also a pick, which is the aluminum, where the inventory is corrected by almost 10 to 9%, 9 to 10%. So this is also a positive side. I am expecting that aluminum will rise in the month of July, and I'm expecting it may trade between 190 to 210. This would be the range for the aluminum. So copper on the first side and aluminum would be the second side. So I think these two commodities on my top pick.
All right, so copper, zinc, aluminum are the metals to watch out for. But gentlemen, stay on with us. On that note, we'll take a short break. The discussion continues on the other side. We'll put focus on silver this time. Welcome back to Commodity Champions. Still with us are Kunal Shah, Pritam Patnaik and Anuj Gupta. And I want to talk about silver right now because we've seen prices continue to be quite volatile. But Kunal, this is another area where the fundamentals continue to be very strong, not the prices though.
Yeah, it's a part and parcel when you talk about the structural bull run in this metal. And it's just a pause because of the macro factors, the expectation of the rate hike, the expectation of further tightening by Europe, by Bank of England, by Fed. And that is basically leading to some profit taking or some correction in silver futures. But the underlying strength of the fundamentals continue to remain intact. The major demand growth in this metal is coming from the photovoltaic industry, the solar industry. And as and when the global warming is picking up, the demand from China and other parts of the world for the solar power continue to rise going forward. And I'm expecting the demand side will continue to remain very strong for silver, whereas this commodity has started the year with a massive deficit. So if you look at the last year demand and supply, we have a deficit of almost 225 million ounce this year. So this kind of number is definitely pointing towards a scenario where the silver prices on its own merit are going to edge much higher than where it is right now. So this is an opportunity right now to build a positions, 67,000 something what we saw low last week. These are the levels, 67, 68, where I would recommend people who missed the rally should start building positions. We are going to see higher prices in months to come. May stay here because of this ongoing tightening narrative, but eventually it is going to shot up and test 77, 78,000 conservatively on the Indian bourses.
All right, 68 is accumulating level and 78,000 is where we could be headed for. Pritam, would you go with that range, and what are you watching out for silver, and how would the month of July really pan out for you?
Yeah, I think I agree with Kunal to some extent. I think it's not going to be a runaway prices again in silver because there are going to be few data points which are going to come out, and market is going to look at those data as very, very crucially because, the Fed statements themselves have no validity right now. They didn't last for a month also. So a month back, we thought we are done with rate hikes, but here comes the Fed and says that you could again see another 2 rate hikes. So the data then becomes extremely crucial. If the trajectory of the inflation continues to be on the downward trend, which unfortunately has been really sticky, I think people are going to be a little nervous about whatever data which comes either positive for the market, and if the inflation continues to rise, I think this Fed is going to be very, very hawkish. It continued, and that's not going to be good for silver. That said, I think everybody has recognized the fact that on the long-term basis, there is a huge amount of value buying in silver. You'll see a lot of support coming in at 68,000 levels, and I think, but it's going to, in my opinion, going to move in a range, tight range again, between 68,000 to 70,500 to 71,000 at best. Because till the time we don't keep the Fed rate hikes on the side, or even ECB or Bank of England's rate hikes on the side, we will not see a kind of unilateral run happening in the silver prices. As far as the industrial, demand goes, one thing we can all agree, we're going to see a lot more sunshine going forward in our lives. Right, I think so. That piece from solar industry, that demand is going to really, really pick up, my senses. And but again, these are things which will happen only when the the growth cycle again comes back and revived in major economies. And so I think for a long-term basis, I think value buying at 68,000 is a great time to buy and invest into silver. But like I said, it's not going to be a unilateral run,
Sure.
but buying on dips is a suggestion that I would do.
All right, Pritam, we get a lot of cautious tone in your recommendation there for silver. But Anuj, whether it's about silver and ferrous metals as well, because steel and iron ore, both of these ferrous metals for the month of June have seen gains anywhere between 6 to 8% as well. So the month of June actually has been quite positive for the ferrous metals there. What are you choosing between these for the month of July now?
Definitely silver is a top pick, but I choose a steel because we saw the huge demand expectation from the steel industry, and also expectation of the steel demand from as well from the global perspective. So my view a little bit on a positive side for the steel side, and we have already saw that on the stock side many steel stocks are on a positive mode. So I'm expecting steel will be the a pick where we can see a huge potential for the next month. So my topic would be the steel, and I'm expecting it may test 48,000 to 49,000 on NCDX on the trading side, and even in physical side, I'm expecting a huge potential. So I'm recommending buy in steel for the target of 48,000 to 49,000.
All right, there's one more discussion that I want to go through, and that is, a lot of people telling us that, yes, it's important to watch metals, but the metal stocks sometimes tend to give you better returns. Kunal, how would you look at the two asset classes in that light?
Yeah, so it's a very good question, because a lot of people do a big mistake looking at the way metal prices are going down, and they correlated that with stock and say metal stocks will go down, but that's not the case. So the entire metal play is about a conversion. So metal prices may move up, but stock may not respond, and vice versa. So if you look at the raw material prices, the cost of production of these metal companies, the significant cost reduction have taken place from iron ore, coking coal, all these prices, and that basically improves their bottom line, and because of that, stocks have rallied recently. So going forward, I think factors to watch out for: the domestic growth, number one. Number two, how the international prices behaves, what is coming from China, that is very important. So all these factors make me believe that the worst is already behind them. And I think irrespective of the fact that there is a QT going on, the downside in even metal stocks looks very limited right now.
All right. So the downside in metals and metal stocks seems limited. So either ways, in case you're looking to accumulate any of these, is a good time perhaps to do that. Pritam, another thing to watch really is going to be the dollar index, because here as well, we've seen a range come in. As the markets start talking about 110, we see the dollar index going to 101. So this is another thing which is very difficult to predict right now. But for the month of July, is there a range in sight?
So I think dollar index is also going to be in the tight range. You're absolutely right. Now, if you were to do a wager on saying where the safe haven money is going to go if the equity markets were to correct, if you listen to the pundits and saying recession is imminent and the money is going to move out of the equity markets. So where is the safe haven money going to move? Is it going to move to gold, or it's going to move to the dollar? I think it's a very difficult question to answer, but I think dollar index is going to move in a slightly tight range. I think 102 to 104.50 is what a range it will start moving in. I think reaching any of these levels of reach, we could see a significant either fall or a rally in dollar index in that trend.
Absolutely. That's going to be one thing to watch out for. I also want to talk about on how the moves can be going forward in sense of percentage. Of course, all of you have picked up your top metals here, but what is the kind of return that we are expecting in the second half of this year as well? So Anuj, while you do talk about silver and steel and copper and aluminum areas, your favorite picks, but what kind of percentage return are we expecting here?
See, in copper, I'm expecting at least 10 to 20% return may be seen in next couple of months, and also in aluminium, I'm expecting 20% return may be seen in the aluminium, because aluminium is a commodity which is still under pressure. So I am expecting a huge bounce back, because as far as concern about the economic growth and as well as concern about the industrial demand, so I'm expecting this would be a commodity where we can see a huge demand from the India side also, and even US also is looking towards the Indian aluminium industry. So I think aluminium would be a commodity where we can say at least 20% kind of return in next couple of months.
Kunal, between your top picks and all the metals that we have spoken within, what's the kind of returns one can expect?
I'll be very conservative. The metals, not a major boost, 5 to 8% return from here. I'm expecting 20-25% of return going forward, because remember, there is a quantitative tightening. So central banks are selling bonds from their balance sheet. That's going to suck the liquidity out of the system for next couple of months. So that is not going to lead to any significant spike in metals. So conservative returns, but I'm quite optimistic about the outlook on silver. I'm expecting silver to move up at least by 10 to 15% going forward in the next 6 months. So I'll be more bullish on silver than the industrial metal front.
All right. So double-digit gains coming in for some of those metals here. But having said that, metals is the thing that you should be accumulating, making a part of your portfolio, whether it's raw material metals or the metal stocks as well. This is a sector that could be on site, in limelight for the rest of 2023. Gentlemen, thank you so much for joining us with that detailed discussion. And with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.